I'm here today to share a super profitable and easy crypto plan that can make you a ton of money. Seriously, this is not some clickbait thing. I really want you to watch this whole video because I'm about to blow your mind with the results of testing this strategy 100 times, and guess what? I'll even spill the beans on a cool trick to get alerts when the right conditions are met, so you don't have to stare at your screen all day long. Alright, let's dive in. Alright, everyone, let's get into this strategy step by step. First, we'll use a 5-minute chart for Ethereum Tether, and 3 indicators to guide us. And guess what? This strategy works no matter if you're a scalper, swing trader, or day trader. So, no need to worry about your trading style. The first indicator is a moving average, which helps us spot potential trends in the market. To set it up, add the PMEx Explorer strategy and screener by Kevin Kozbiljic to your chart. Then go to Settings and make a couple of changes. Under Inputs, set the length to 49 and increase the multiplier to 5. As for the style, just use the preset I've already set. It's pretty straightforward. Moving on to the second indicator, we'll use the Relative Volatility Index by Averget. To optimize it, we need to adjust the style settings. Simply uncheck all the options except for the RVI and the middle line. We'll also make the middle line more visible so it's easier to see. Lastly, our third indicator is the market structure fractals by Lux Algo. To make it work better, play around with the colors in the input settings until they're clear to you. Then, in the style options, uncheck the first 2 boxes. Now that we have all our indicators set up, let's move on to the entry rules. Alright, everyone, let's talk about the rules for entering trades in this strategy. It's actually pretty straightforward. Rule number 1. If the price is above the PMEx indicator and the background color is green, that's our signal to consider long position. On the flip side, if the price action is below the PMEx indicator and the background color is red, that's our cue to think about a short position. Easy to remember, right? Now, let's move on to the entry signal. We'll be using the Lux Algo market structure indicator for this. Here's how it works. First, we want to see a change of character signal within the existing trend. This means the market structure is shifting a bit. Then, we look for a break of structure signal. If we see this sequence of events, we have our entry signal. When the break of structure signal is colored in red, it tells us that we might be in a bearish market, indicating a good time to consider a short position. On the other hand, if the break of structure signal is colored in green, it means we could be in a bullish market, suggesting a favorable time to think about a long position. By following these rules, we can make more informed decisions and navigate the market with confidence. In addition, when we decide to make a trade, it's really important to double-check the signal from our market structure indicator with the RVI. Let me break it down for you. If we get a signal to go long from our market structure, we need to make sure that the RVI moving average drops below the 50 middle line starting from the time we notice the change of character before the break of structure entry signal. Basically, we want the RVI indicator to confirm our decision to go long. See this example here. We wouldn't go for a long trade because the RVI indicator didn't give us the confirmation signal. On the flip side, things work the opposite way. When we're entering short trades, we require the price to be below the PMax indicator, CABOS signal from the market structure, and before we jump in, we check the RVI. We want to make sure that from the chalk point to our boss signal, the RVI has crossed above the 50 band line. By adding this extra step of confirming with the RVI, we add another layer of caution to our trade entries. It helps us ensure that we're getting strong signals that line up across different indicators. The best time to enter a trade is when we get a clear signal from the PMEx indicator. and we should only do it once during each PMEx cycle. This helps us protect our money by avoiding too many trades when the trend is losing strength. Let me show you an example. We can see that a new bullish trend started, and we had all the right conditions at this particular candlestick. We got a bullish boss signal, and the RVI confirms our entry as it drops below the 50 middle line during this window. If we had entered the trade at this point, we would have made a successful trade because there was enough momentum in the market. But here's the important part. If we ignored the rule of only one trade per PMex cycle and made more trades, we would have lost a lot of money soon after. As you can see, the bullish momentum decreased when we got our entry signal. If we had taken more trades during this time, we would have lost a big chunk of the money we made earlier. So, it's really important to follow the rule of one trade per PMex cycle. This way, we can protect our profits and avoid unnecessary losses when the market conditions change. Now, let me show you an example of a short trade. We noticed that the price recently went below the PMex indicator, and our other indicators confirmed this signal. So, we decided to enter a short position at that point. To be safe, we set a stop loss at the highest point of the recent swings, and for our profit target, we aimed for a level that was two times the amount we risked. Just so you know, we risked 2% of our account for this trade. In this particular example, our risk paid off, and we made a profit of 4.4%, a nice result. Now, let me show you another example of a short trade. This time, we received short signals from the market structure indicator. After taking a closer look, we noticed that the RVI indicator confirmed our entry by crossing above the 50 band line before we got the red boss signal. So, we decided to take a short position, set our stop loss at the highest point of the recent swings, and aimed for a profit that was 2.2 times our initial risk. This trade turned out to be successful too. On the flip side, here's an example where we should avoid taking a short trade, even though the price is below the PMEx indicator and the market structure gives us a signal. The RVI indicator doesn't confirm it. In such cases, it's better to skip the trade. This shows why it's important to have an indicator like RVI to avoid losses and increase our profits. Now, let's talk about a long trade example. We noticed that the market structure provided us with a green boss signal after the chalk signal, and the RVI indicator confirmed this by closing below the middle line within a specific period. Overall, it seemed like the market was in a bullish trend. And guess what? This trade also turned out to be successful. These examples highlight the potential for making good profits when we catch a strong and continuous trend that's in our favor. So, it's important to follow these trading rules. Now, let's test this system several hundred times. I'm genuinely excited to see the results. Alright, everyone, we've finished our backtesting, and you won't believe what we found. In just 9 weeks, we discovered 100 setups for trading. We started with a $1,000 account and decided to risk 2% on each trade. Now, get ready for this. Our win rate is an impressive 62%. Can you imagine that? And here's the real shocker. We made a mind-blowing return of 196.8% on our account. It's absolutely incredible. Right from the beginning, our account took off without any major losing streaks. We might have experienced just 2 or 3 losses in a row. Take a look at these spikes and crazy jumps on the charts. It means we caught some really good market conditions. I've also added this strategy to our spreadsheet, so you can compare it with others and choose the best ones. So far, this strategy has proven to be the best one we've ever tested on this channel. Now, let's talk about setting up the alert trigger. Since our last condition relies on the boss signal and our market structure indicator doesn't always give signals, here's what you need to do. Go to the indicator search tab and find the swing high-low support and resistance by Pattern Smart. Once you've added it, set up your alert. In the conditions section, choose the asset you want to trade. Then, for the second option, select crossing up if you want to go long or crossing down if you want to go short. The third option is for choosing the swing indicator. The SHX represents bullish signals, and the SLX represents bearish signals. After setting up these conditions, you can choose how you want the signals to be triggered. Finally, click the Create button to confirm the alert. By following this method, you'll receive about 95% of the alerts when they are triggered. Just keep in mind that it might also give signals when there's no chalk or boss present. However, overall, we can see that most of the swing levels match with the market structure levels. I hope you found this video helpful. If you did, go ahead and give it a like. And if you want to see more videos like this, make sure to subscribe to the channel. See you in the next video.